Welcome, everyone. It's great to have you with us today for our webinar on unlocking pricing agility in hospitality. We'll start with intros and then we will dive into it. So my name is Joel. I'm the founder of Opener. I have been building Opener for the last 4 years. Prior to that, headed up digital and technology at the Azira Group. Nick, do you want to introduce yourself and then we'll get cracking?
Hi there, I'm Nick. I'm Chief Customer Officer at Opener. I've been at Opener for about a year and have a long history of working within hospitality and hospitality tech for various platforms.
Amazing, thanks Nick. So I wanted to start this session with a question. When was the last time that your business made a pricing decision and got it live across every channel within 24 hours? For most operators, that's not how it works. And today, what we want to talk about is why, and more importantly, what to do about it. So we're going to set the scene with a bit of feedback that we hear from operators all the time when we're speaking to our customers, when we're speaking to our prospects. Multi-site pub and restaurant brands are under intense pressures right now. Rising costs, price-sensitive guests, and a market that keeps moving faster than most businesses can respond to. And the frustrating thing for all of us is that the opportunity is sitting right there alongside the pressure. Pricing is hospitality's largest untapped profit lever. The ability to price by demand, by day part, by channel, by event, that's not theoretical anymore. The technology to do it has arrived. And the question is whether your business is set up to use it. And for most operators, it isn't. Not because of strategy, but because of execution. And here's what we hear consistently when we talk to commercial teams across the sector. The ideas exist, the ambition is there, but the current ecosystem, the way that menus and pricing actually gets managed and deployed, is preventing operators from acting on any of it. Complex processes, inefficient manual updates, systems that don't talk to each other mean that even a straightforward pricing decision can take weeks to reach the customer. And this is what it looks like in practice. For many multi-site operators, a single pricing change touches 10 or more separate sources of manual data entry. The till, the delivery platforms, the website, printed menus, kiosks, digital menu boards, each one updated separately, often by different people and at different times. And so there's no single moment when a change goes live everywhere. It drifts into existence across channels, and by the time it does, the commercial context that triggered it has already moved on. So we partnered with Tech on Toast earlier this year to put some numbers around this and get a sense of how big a problem this was. 75% of operators that we surveyed told us that they only review their pricing 1 to 3 times per year, despite the fact that we all know costs move continuously and, to be honest, faster than ever with the increasingly volatile external environment that we operate in. More than half of operators estimate that they are losing between 2 and 5% of margin every year, purely because of pricing delays. That's not one big visible moment. It's the accumulated cost of changes that went live too late, experiments that never happened, and margin that got quietly absorbed while the process caught up. But here's the thing. At Opener, we truly believe that this is also an opportunity. So agile pricing based on demand signals, day part, channel and event is now achievable for operators who have the right infrastructure in place. So as an example, one of our customers, Stonegate, moved from 4 price changes a year to over 30, not because their strategy changed overnight, but because execution stopped being the barrier. And what Opener does is connect your pricing and menu data so you can update once and publish it everywhere. No spreadsheets, no delays, no chasing teams across multiple systems. And we're doing it today. across nearly 2,000 locations. Stonegate, Azuri Group, Big Table Group, Hall & Woodhouse. These are businesses that have moved from blunt, slow pricing decisions to precise control by product, by site, by region, by day part, applied instantly across their estate. And that, we believe, is the direction of travel. And the framework that we're about to walk through is designed to show you where you currently sit on that journey and what the next step looks like in practice. So before we get into detail, just a quick word on how to use this framework. So this isn't a ranking system, it isn't a sales pitch, it's a diagnostic. And when we sit down with operators, whether that's a finance director, a commercial lead, or an ops team, the first thing we try and understand is where they actually are, not where they'd like to be, because the right next step looks completely different depending on where you're starting from. And what we've found across every conversation that we've had is that businesses who struggle most with pricing aren't struggling because of bad strategy or lack of ideas. They're struggling because their operating model can't keep up with their ambition. So this framework is really a way of trying to make that visible and giving you a clear, practical picture of what moving forward actually involves. There's 4 stages, each one builds on the last, and as I walk through them, I'd encourage you to think honestly about where your business sits today, because that's where the value of this session is. So let's get into it. So here are the 4 stages at a glance, and then we'll go a little bit deeper on each one. So the first stage is manual, and this is where pricing lives in spreadsheets. Updates happen individually across each system. The process is slow, fragile, and high risk. Good ideas don't really get tested because execution's just too hard. The next phase is centralized. There's more structure here. So there's central ownership. There's probably some form of approval chain that you have in place and potentially some defined price bands across your business. It feels controlled. But deploying a single change still requires coordinating 3 or more teams, and anything experimental never really gets off the ground because it's still too hard to coordinate. The third stage is connected, and this is where things start to change quite meaningfully. So pricing and menu data are now live in one place and flow out from that one place to every channel automatically. It takes hours, not days or weeks. And critically, execution becomes fast and reversible, which changes what teams are willing to attempt. And then the final stage, the nirvana, if you like, is optimized. And this is where pricing becomes a continuous capability rather than an occasional exercise. So the business can run experiments, build real knowledge about its own customers, and compound that learning over time. Each decision is better informed than the last. And just being really transparent and direct, most of the operators we speak to at the moment are sitting between stage 1 and 2, between manual and centralized. The intent to progress is there. The intent to be more sophisticated when it comes to price strategy is there, but the infrastructure isn't. And that gap between where you are and where you could be is exactly what the rest of this session is about. So let's dive into these stages. So let's talk about stage 1 manual. This is where a lot of businesses are when we begin our conversations with them. So picture the pricing process at this stage. So there's typically a master spreadsheet, maybe several, owned by different people. If I could see people's faces on this webinar, I'm sure I'd see people nodding along. When a change is needed, someone exports it, emails it around, maybe using SharePoint or Google Workspace, some kind of shared file to get this data from one team to another, and then each system gets updated individually. The till, the delivery tablets, the website, each one separately, often by different people, sometimes days apart. We'll all see marketing teams with a till brief that are then trying to transpose that into a printed menu software, or a delivery team that have received something from IT that are pumping that data or punching that into their delivery platforms. There's ultimately no single moment when a change goes live everywhere. It kind of drifts into existence across channels. And because everything's manual, there's no reliable way to know what's actually live at any given time. Often someone's working from last week's file, a delivery platform gets missed, the website showing a price that the till hasn't caught up to yet. And because of that, you only really review your pricing 2 to 3 times a year because it's so stressful. Really big, effortful exercises that everyone braces for. You kind of sit there the next day relieved that that's done, don't have to do that again for another 6 months. And our research found that 65% of operators still rely on spreadsheets as part of that process. So it's a big proportion of operators. Teams spend upwards of 20 hours a month on data re-entry. I mean, 20 hours a month just on entering data into systems and spreadsheets. And in larger estates, we found that regularly tops 100 hours. And around 1 in 3 operators experience manual pricing errors. But the number that really matters isn't just the hours that it takes and how much effort is involved. It's what that kind of fragility does to appetite. So we spoke recently to a commercial team at a large casual dining group who wanted to run lunchtime pricing trials, stagger prices across a 2-hour window, measure the impact on attach rates and participation. Completely reasonable hypothesis. But when they mapped out what it would actually take, republishing multiple menus daily, coordinating across teams, with no way to quickly fix something if it went wrong in front of customers, they shelved it. Not because the idea was wrong, but because the process made it impractical. So that pattern, good ideas never getting tested because execution is too hard, is the real cost of stage 1. So let's move on to the next stage, which we call centralized. So a finance director at a large QSR operator recently described their situation to us in a way that kind of really stuck. The ideas were all there: late night pricing, delivery versus eat-in differentiation, event-based strategies. The modeling was being done in spreadsheets outside the core systems. Really smart people, clear thinking. But when it came to actually executing any of it safely, at pace, across the estate, the process couldn't keep up. The phrase that we heard was that the strategy was running ahead of the infrastructure. And we hear something close to that in almost every conversation we have at this stage. And the data explains why. So more than half of operators are coordinating across 3 or more teams or systems to deploy a single price change. Procurement, finance, operations, external suppliers, point of sale. Each handover adds days. Each handover is a point where something slips or stalls. And here's what that produces in practice. Not chaos. This stage feels controlled, and in many ways it is. There are defined price bands, central ownership, approval chains. But the complexity of the process means anything experimental never really gets off the ground. A regional trial, a channel-specific test, a short-term promotional pricing strategy, the overhead makes it feel not worth the effort, and so it doesn't happen. And the ideas that were being modeled in spreadsheets stay there. So what about the next stage? In the connected stage, pricing and menu data are now managed in one place and flow out from there automatically. A change is made once, centrally, with the right governance, and it reaches every channel without a separate deployment exercise. So tills, delivery, website, kiosks, one action everywhere in hours rather than days. And the practical difference is really significant, but the more important shift is what it does to the team's willingness to act. So what we find is that when execution is fast and reversible, risk changes character. The trial that previously felt like a gamble, like wrong prices live, no easy way to fix it, becomes a manageable experiment. So teams stop defaulting to estate-wide changes out of caution and start running smaller tests that actually tell them something. So for our customers before Opener, one of our customers, 4 price changes a year across 1,500 venues, all estate-wide, taking 4 to 6 weeks end to end. Today, over 30 changes a year per product, per venue, with different strategies running simultaneously across different parts of the estate. And the thing that I would highlight about that isn't the number, it's that their strategy didn't change. The ambition was always there. What changed was that execution stopped being the reason not to act. And I want to say something here that I think the industry is largely avoiding. There is an enormous amount of conversation right now about dynamic pricing, AI-driven recommendations, real-time rules, predictive elasticity modeling. And look, that stuff is genuinely interesting and it's coming, but it does completely miss the point for most operators because you cannot bolt sophisticated pricing capability onto a rat's nest of systems held together with string and sticky tape. Just doesn't work. All you get is more complexity sitting on top of a problem that was already making your team's life difficult. And nobody's talking about the real unlock, which is building the execution infrastructure that makes that experimentation possible in the first place. If you get that right, the more sophisticated stuff becomes genuinely achievable. If you skip it, you're just adding noise. And stage 3 is that foundation. It's not glamorous, but it's where the real commercial advantage starts. And stage 4 is what most vendors lead with and what most operators are skeptical of, understandably, because it gets described in terms that feel a very long way from where they actually are. So I'll try and describe it plainly. At the optimized stage, pricing isn't something that happens in occasional rounds. It's a continuous commercial capability, like running in the background, generating evidence, informing the next decision. The business runs on a trial or a subset of venues this week, reviews the data next week, decides whether to roll it wider or pull it back. And over time, the team builds real knowledge about their own customers, which products hold at a higher price, where there's headroom, where there isn't, not from benchmarks or gut feel, but from controlled experiments on their own estate. And because execution is fast and rollback is straightforward, the fear that used to surround pricing changes largely disappears. And the question shifts from what if something goes wrong to what can we learn from this? And one operator put it simply in a conversation with us. Imagine you can run 12 pricing experiments in 6 months, and 4 of them drive growth, 4 of them make no difference, and 4 of them put sales backwards. Well, you've learned 12 things. 4 things that you can roll out to grow group revenue, 4 things that you thought would move the dial, but you learned would not before rolling out to scale, and 4 things that you learned made no difference at all. If you're able to do this, you will be compounding learning in a way that a business doing 2 or 3 estate-wide changes a year simply can't match. And the advantage isn't the pricing itself, it's the pace of learning. Few operators are fully here yet, to be completely honest, but the distance from stage 3 to stage 4 is shorter than most people expect once the execution foundation is in place. So to bring this all together, most people on this call are probably between stages 1 and 2. The commercial intent is real, the ideas exist, and the people are capable. What's missing is the operational foundation to act at a pace that makes learning possible. And without that foundation, even good strategy underperforms. And the research that we commissioned found that more than half of operators estimate they're losing between 2 and 5% of annual margin through pricing delays alone. But I'd argue the most important number is the one that you can't see on the P&L. It's the experiments that never ran, the trials that never got set up, the cumulative commercial knowledge that never got built because the process made it too hard to try things. And that's what closing the gap now actually unlocks. And Nick is going to take us through that commercial case now, the numbers behind what moving along this model actually means in practice, and some of the practical steps to get started.
Thank you, Joel. So the first thing we need to do is to try and understand where we are on the maturity framework. And a lot of the conversations that we have with operators is around doing a number of discovery sessions with different teams to understand where to start. And that starting point becomes really, really important. And the reason for that is because what we're talking about is a fairly fragmented, but then equally complex picture. And the reason it's difficult to solve and the reason that hasn't been solved to date is because of that complexity and that difficulty. And jumping from a world whereby you don't have that element of connectivity or centralization or that single source of truth, right through to that kind of optimized layer of pricing execution is not realistic. And so what we often do is to try and work with different teams to understand, well, where is the starting point? What's your current infrastructure? Where are the problems? And how can we start to simplify that? How can we start to help you think about what will add most value to you as an organization? And that's the other piece in today's market. It's unlikely that you want to go through a long, exhaustive transformation process. and you want to focus on adding value as quickly as possible, and then taking incremental steps along the way. And the pricing agility audit helps you just think about what that first step is. And generally, we will help you do that through these discovery sessions. These are some of the questions that you can ask yourself as a business. Joel's alluded to many of these, and as we go through a practical example of how we can use the maturity framework, again, obviously, there'll be a lot that has already been covered through Joel's piece. So some of the questions there: how long does it take to get a change live? That's a pretty obvious question. Ability to A/B test safely, or do you have that ability at all? Data confidence, and data confidence comes not just in menu and pricing, but it can come in allergen information, for example, which is it is an area that obviously you have to have 100% confidence in. And then just generally, where is that manual friction? Where are those friction points? Is it spreadsheet? Is it handovers? How much are you rekeying? And that's a really important point, because actually by getting the process to a place whereby you're removing friction, you're kind of removing that manual overlay, you're much more likely to be in a position to get to that optimized stage where you need to be in the future. If we go on to a practical example, so that's the agility audit. There's a lot in that to unpack, and it's definitely something that we can support with. So onto a kind of a practical example moving forward. So as you all know, the Football World Cup is coming up. That's definitely not a secret. So that's not new news. But it's a great opportunity to put execution to the test. And it's a great opportunity to unlock further revenue. And why is it an opportunity? So obviously it's a standout trading period. And that more so than ever this year, because obviously both Scotland and England have qualified, which means more fixtures, and it means a sustained period of demand. So over a 6-week period or more, you'll have that sustained demand, which is super important. That being said, the data from the previous Euros, for example, shows that not all those days are equal. So demand is not steady throughout. Demand can fluctuate. You can get extreme uplifts, but equally you can see days potentially that will decline versus others. And that's a really important point when you're thinking about your strategy. So as a strategic play, what we also know from data from previous championships is that the fixtures draw different audiences, whether that be demographic changes or differences, or whether that be when the fixtures are actually held, so what time of day. And because the World Cup's in the US, you're seeing a lot of fixtures in the evening, and then maybe even later. And so if you look at dwell times, ordering behavior, what you will see is that if you apply the same proposition to everything, to all fixtures, then you're likely to be leaving revenue on the table. And that's a super important point. And so it's an opportunity to structure your menus in a different way, without necessarily creating any friction, simply because what you're trying to do is understand how you can apply different strategies across different channels to make sure that you're activating all of that revenue across that sustained period of time. But obviously, as Joel highlighted, for many businesses, that execution becomes a challenge, because if 60+% of operators take more than a week to get a price change live in a condensed period of time, it's fairly obvious that you will not necessarily be in a position to take advantage of all of those revenue opportunities in that condensed period. And what we do know is that if you don't move fast, yes, you'll benefit from the volume, but you won't necessarily always be benefiting from the margin that can come with it. And so what we're going to do next is look at how the World Cup becomes that kind of live, time-pressured version of the problem that the maturity model has described and Joel has described earlier. And really, what you want to see from operators is they're moving through the maturity model to get them to a stage whereby they can really benefit commercially from this, this great trading period coming up. So let's look at the maturity model and how it looks from a World Cup perspective. So again, going back to those different stages, so manual versus centralized versus connected and optimized. So if we think about it, if we all look at the maturity model through that World Cup lens, so manual really is a BAU piece. So the reality is there's not going to be a substantial amount of change if you're at that manual step in the maturity model, because you simply don't have the ability to be more agile than you currently are. So at best, potentially you might make one pricing change for the estate for the World Cup, but you're unlikely to be able to apply any more agility than that. When you get to the centralized stage, this is when you might see a little bit more progression in agility. So yes, you've created that pricing change or that menu change for the World Cup period. Potentially, you could do a slightly more than that. But again, because the timelines or the lead times to making changes are still significant, and because you still have that pain or that challenge around making those changes, you're still not taking full advantage. You still don't have the agility that you need to be able to be more specific around venues or around menus or around day parts or around channels. And that certainly will be a miss for a trading period such as the World Cup. Then we're getting into where really you can start to unlock more revenue or significant amounts of more revenue through the World Cup period. So the connected period, which means you don't have the tools to have that agility. So you can deliver pricing and menus that are different across different channels, across different day parts. And you have the ability to take that volume and convert that volume into margin in a way that you wouldn't have otherwise, which is super, super important. The optimized piece, which is the holy grail, and there's going to be very few operators that exist within that step in the maturity model. But that optimized piece really means that this is a huge compounding learning opportunity. So not only are you taking advantage of the margin that exists, you're converting that volume to margin, you have that agility across all the channels as we've described in that optimized state, because you're constantly learning. That learning then compounds, and then you're making the most and you're creating that agility over time, so that even when you get into the latter stages of the tournament, for example, that learning is compounding, it's compounding your ability to generate more revenue or more margin from that trading period. But equally, that we recognize that that's a few steps beyond where many operators sit today, but that's kind of the holy grail, both for the World Cup and for the future. So hopefully what that has done is it's given you an idea of how that maturity model looks when you overlay a practical real world example in the World Cup, which is coming up, which we can all accept for many of our businesses is an optimal time to be increasing revenue. And hopefully that kind of practical example will start to help you think about where you sit in the maturity model.
Thank you, Nick. So yeah, I just wanted to thank you all for joining us for our webinar today. Well, hopefully it's been a useful half an hour or so, and the framework gives you something practical to take back into your business, whether that's a clearer picture of where you are today or perhaps a sharper conversation to have internally about where you want to get to. And if anything we've covered has resonated and you'd like to go deeper, we'd love to talk. The best place to start is a pricing agility audit. It should be like a focused 30-minute, 45-minute session where we can help map your current setup against that maturity model, help you identify like where that friction sits and give you a clear view of what the next step could look like for your specific business. There's no obligation, no hard sell, just a useful conversation. So you can get in touch with us directly through our website, which is weareopener.com, or you can drop Nick or myself a message on LinkedIn. We're both pretty easy to find. If you'd like to book an audit, we'll pop a link up on the Opener LinkedIn profile as well, and grab a slot that works for you, and we will take it from there. So thank you again, everyone, for your time on this webinar, and we'll see you out there.
Thank you very much.